I'm Jeremy Creelan. I'm a partner at Jenner & Block in New York, and I'm delighted to be here. And I want to thank the AFC and Fintech Nexus for organizing this. It's a timely topic, and we're going to get into why that is. But first, let me just do some quick introductions, if I could, of the panel. First, I'll start with Armin Meyer, who is the head of public policy and regulatory strategy at Lending Club, National Bank. And he is also co-founder of the American Fintech Council and really a critical driver in developing that organization and its work. Before joining Lending Club, Armin was a managing director in PwC's Financial Services Advisory Group. And before that, he was the chief of staff of the New York State Banking Department, the predecessor to DFS. So he has a remarkable background in government and in the industry. So welcome, Armin. Next, but not least, we have Penny Lee, who is the president and CEO of the Financial Technology Association, which you all know. And Penny has more than 20 years of experience in the public and private sector, has worked in government for Governor Rendell and in communications in the private sector, and has been really a leader in DEI work in the industry and in the association. Welcome, Penny. And then we have Nat Hoops, Vice President, Head of Public Policy and Regulatory Affairs at Upstart, leading lending marketplace, of course. And before that, a founding Executive Director of the American Fintech Council, and previously, before that, the Executive Director of the Marketplace Lending Association, its predecessor. Also a great background in government, working for Senators Brown and Lieberman, and also a graduate of Phillips Exeter Academy, where I have two sons. So.
Go Big Red.
Yep. And lastly, but not least, John Pitts, the policy lead at Plaid, which you all know is at the heart of open banking. And before Plaid, John was the Deputy Assistant Director of Intergovernmental Affairs at the CFPB. So welcome all. Thank you. So let me begin our discussion with some basics. A lot of folks here know a lot about open banking, but for those of you who don't, I want to begin, and I'm going to ask John if you could, can you give us, because of Plaid's, critical role in this industry, can you give us some of the sort of best use cases of open banking and really what it promises for consumers?
Sure, and thanks. And thanks everyone for coming. Last one. So we'll try and keep it energy high energy, yeah.
100%.
So I'm wearing
we want that
red
reflected
socks.
back at
Yes.
We can't see you, but we feel
audience participation, assuming any of you are out there. So let's start with just what open banking is, right? It's the basic prospect that I, as a consumer, have the right to access my financial data and share it with someone else in order to get something that I want. And the reason that's critical to, I think, everyone in this room is virtually every fintech, when they are onboarding a customer, the starting point is, I need a little bit of your financial information, and it's usually held by someone else. Your bank, your investment advisor, your brokerage, a fintech neobank that you've got an account with, and I want to easily get it in there. And before 10 years ago, that was like filling a box with printed out statements and carrying that box to someone, and then that someone takes that printed out statement and types it into an Excel spreadsheet. Well, it seems easier if you can just instantly and digitally move it from the bank account into that Excel spreadsheet without all the steps in between. But why does that matter, right? Other than it's the lifeblood of every company here, and it's the future of financial services. Other than that, why does that matter? And it matters for me and my kids as a dad. We pay allowance to our kids, $1 per week per year old that you are. And I have 12-year-old twins. When they were 6, that's $6 a week. And we also break it up into 3 buckets: spend, save, give. So $2 goes into each bucket every week. By the time they were 12, that's a lot of $1 bills that you go into a bank and ask for. And there is, without being risque at the end of the day, an awkwardness of asking for a lot of singles from a bank over and over again, aside from the hassle. So I researched what's the best allowance app for kids and found one called BusyKid that automatically moves money from my bank account into an app It's got an account in the app for each of my kids. It comes with a debit card, and the app has 3 buckets in it: buy, spend, save, give. Give links to a bunch of charities that my kids can automatically donate to. Save links to investment accounts that my kids can invest in the stock market. As I was signing up for that app, the first thing that popped up was a Plaid screen, linking my account to that app so that my kids get their allowance in the way they want to get it. No bank offers that service. Why is a bank going to create a service that's like an allowance app that works for every kid in the United States and creates this split? It's the most valuable financial service I have in my life. And open banking created that. It would not have existed without it, and it's a life changer for me. And the amazing thing is Plaid has 8,000 customers. That's 8,000 life-changing use cases for millions of people in this country. So that's how I would summarize open banking in the use cases.
That's a great example. It also reminds me to give my kids a lesson in financial literacy, which of course they're already 18, but I can never too late, I guess. That's a great start. Let me ask Nat, if you could, Nat, as a lender, from the lender's perspective, curious how your company and your sector is viewing open banking these days.
Sure. So we're not a direct lender. We have 90 banks and credit unions using our technology. We also are a lead generator, so we're out there in the market helping source the customer at places like Credit Karma, at LendingTree, at NerdWallet, and then matching them with an offer from one of our lending partners, and that includes the classic marketplace lending partners like Cross River Bank, but it also includes just traditional banks and credit unions that want to fulfill their mission of lending money to people in their region of Nebraska, right? So that's a kind of a core service of a bank, and our belief is, rather than be a bank, that facilitating that technological marvel, as John just put it, all digitally with instant approval and a rate that's fair, and then getting funded very quickly is something that is best done by the people with the lowest cost of capital, namely the banks, right? Ideally. So that's Upstart's model, and I would say open banking is critical, as Director Chopra just said on the main stage. He envisions a future much the same that Upstart envisions, which is less reliant on traditional 3-digit credit scores. So today the problem with credit scores is that they get used, not that they're used in a model, but that they get used as a blunt instrument where everybody below a 700 will not be even invited to participate. They'll be sort of ineligible for a certain lender's credit box. And so that means that you have a much less inclusive pie that you're reaching out to. 4/5 of black borrowers have a credit score under 700, even if there hasn't been a default. These are sort of legacy problems. And so Upstart, working with Plaid, can get a much more granular view of a customer's financial health and makes us less reliant as we help people get approved than we would be if we were stuck with a traditional credit score. So open banking and access to data, as Director Chopra just said, is the future, and it's sort of one that we just need to manage in a safe and sound way from the consumer protection standpoint, but also from the safety and soundness of all the institutions that are involved in that chain.
Can I ask a follow-up question on that? We're going to get later into the regulatory issues, but let me just ask you sort of to preview that a little bit. These use cases sound so good, and they're so present. They're very much in the present. Why do we need regulation at all if the industry has gotten us so far?
I would say, since your sons are at Exeter, I'll use a great Exeter statement, which is that goodness without knowledge is weak and feeble, and knowledge without goodness is dangerous. Okay, that's a famous statement. So the idea of an unregulated access to a consumer's bank account without effective supervision, Plaid's willing to be supervised by the CFPB without oversight, consumer protection, you could see that run amok in ways that would be problematic. And so I think that the idea of regulation and supervision and giving the consumer the right to share their data with the best possible, we think Upstart's the best possible solution for them, but they ought to have that choice and make sure that they're not being sort of taken for a ride and their bank account drained by some predatory actor. And so that's sort of the vision, is make sure that things are overseen in a safe and sound way.
I guess, and that I think implicit in what you're saying is that we're not there, we're not at that vision yet because we're not able to have that kind of sharing as seamlessly, as quickly, as certainly as safely as we could otherwise.
I think we have it to a certain extent, but I don't think that we have it fully overseen the way we want, and it's not guaranteed. So at any instance, a traditional financial institution could throw a roadblock in the way of a customer wanting to share their own data, and if they do that, they're potentially depriving the customer of getting the best possible price, and that can be the difference between being able to fix your transmission and get to work and not get fired. I mean, these are meaningful experiences for people, being able to access credit very quickly and in real time, and if the Plaid isn't enabling an affordable small dollar loan or something like that, then, so I think that the idea of an open banking framework that's well regulated and supervised, but is truly open, like truly means the customer can control and access their own data and share it with the best for the best, is hugely important.
Okay, that's a helpful preview, so a teaser for the next few minutes. I'm going to turn to Armin for some, skip over to Armin for just a second. From the perspective of a bank, a chartered bank, how do you see open banking and its promise at this point?
So trying to make this panel interesting at 4 o'clock, I want to find so many ways to disagree with John and Nat. But I, except for Upstart being the best, it's the only thing I can think of to disagree on. But at Lending Club, I think people think that when you become a bank, suddenly open banking was really cool when you weren't a bank and you were a non-bank fintech, but now you're against it. But the reality is it's just going to empower even more as a bank the thing we were doing when we weren't a bank and we were partnering with WebBank. And that is, first, what Nat is saying. I mean, if you can, Nat mentioned looking at bank accounts to price risk better, to lower the cost of credit. We should really throw on the really easiest use case, which is verifying income. I mean, it's a great fraud control to be able to just quickly tap into a bank account when they give you access to see, are they making the money they tell you they're making on their application. But way beyond that as a bank, and this is why banks should be embracing open banking, not running from it, is the war for deposits. I mean, if I can actively market our great annual percent yield, but the deposit holder doesn't have massive friction to move their account, that means that there's more mobility for the best product to win. And never mind APY, there's if your product is just easier to use, less friction, if your product has better financial health tools associated with. We don't want the talons that banks put into deposit accounts to be so strong that that a customer can't move their transaction information they want to, or move other information. So I think that's a real benefit of banking that banks should embrace.
Okay, great. And Penny, I want to ask you, you have sort of the overview here, across the industry, your members. And so what are you hearing and seeing from your members about either the promise or the pitfalls of open banking?
Yeah, so our organization, the Financial Technology Association, represents kind of a wide variety of what you would define as fintech companies, and they are in lending, they are in payments, buy now, pay later, earned wage access, cross-border payments, investment vehicles, platforms, and many other different aspects. And so, there's a different use case to what John and Nat were alluding to. There's a different use case scenario for each one of those applications. And they're all, though, based on the fact that the consumer can benefit better from this increased access into the data in which they're able to share. So, a lot of the products that we have aren't necessarily different than what you knew way back when. A buy now, pay later, has the same kind of premises, a little bit of, you went to a store, you put something on layaway, and then you got it out. There's nuances now that it's digital. And so instead of having to take, as John was saying, the bucket of paper in there to prove who you are, what your assets were, to be able to qualify for this financing, you now are able to do it digitally. But the notion of open banking and having the consumer say, this is who I want to interact with, and this is the data that I'm willing to provide them, gives an incredible amount of even more rich data, so they understand what credit level to set somebody at. They understand how much lending that they should be able to be afforded. They understand on an investment platform where something might be good to go into, or with the amount of savings. Hey, have you seen this? This is a better savings apparatus or app for you. And there's just so it kind of meets the consumers where they are at today and where they're going. I think there's, on average, I was reading a recent study, millennials right now interact with about 25 to 30 different apps on a daily basis. And that whether it be from, multiple investing, whether it be savings for one, spend management for another, banking for another, a wide variety. And so we, as we think about the rules and regulations in the roadmap, even, Director Chopra referenced it today, there is a future out there that's going to be easier, more accessible, and we need to build for it. And regulation needs to get, I don't know that they'll ever get ahead of it, but they understand where that roadmap is heading and what we need to do to protect the consumers, but yet give them the ability to have a better financial life.
And I would say the macro index is pointing towards the real influence in terms of what drives macro impact on lending. The savings rate is everything, right? That's a massive factor. If you had to tie one thing, that coming out of the pandemic, people were flush with money, then they were excited to be out and about, and they were spending money like crazy, and then we had inflation, and so people got a little sideways, and so that sort of dynamic, well, if you think about it, if you have the ability to analyze on the micro level the personal savings rate of the individual and how they are doing with bank account information, that is an incredibly powerful accuracy tool to avoid pushing money on somebody who's not going to have the ability to repay. Right? And so that ultimately is such a critical part of our regulatory framework is, not putting people in a position of not being able to repay and failing with credit. And the data is, both, helpful today in the fraud and, that the person is in the situation they're representing to you when they're applying digitally. But then it's also going to be long-term, I think, a big key part of underwriting of figuring out how to get people in the right position and only push credit, to people that are going to be able to pay it back.
Thanks, Nat. So, we've covered a lot of some of the key benefits to consumers of having more nuanced data available and the ability to shift from one financial institution to another. I want to talk briefly about some of the pitfalls or concerns that have been raised about open banking and how they might be dealt with, and then we'll sort of get into some of the current regulation. So the first area I want to focus on, which is something which Director Chopra addressed today, which is really, in the wake of SVB and that failure, the notion of making it even easier to pull your money out of a bank and move it somewhere else. That's a frightening concept unless we look a little deeper and see whether there's a way to make sure that it doesn't just produce more bank failures for the wrong reasons. So I'm interested in, and I'm throwing this open to the panel, your thoughts on that question. And I think Director Chopra referenced, one strategy to deal with it, which is liquidity, capital requirements. Curious if that really is the only strategy or if that makes sense.
So I can take that, Jeremy, first. And, you said it's a scary thought. I have a scarier thought, which is not being able to have access to my money, right? And I think Director Chopra was very clear that the world we are in and the world that he expects is consumers have access to their money and have access to it all the time. FedNow is launching in 2 months, right? People are going to have instant access to their money all the time. And so I think it was very helpful to hear Director Chopra clearly say, this is not slowing down open banking. This is the world we are in. Everyone needs to adjust to this world. The one thing I'll just point out factually is I think it's funny that people are trying to draw a line between the two, because the reality is SVB was multimillionaires and billionaires and giant companies moving tens of millions of dollars over FedWire. Well, FedWire has existed for 50 years. And they were moving it because they were on a message board and they were sharing information about, I'm not sure about this, and they were reading call reports. Well, call reports, message boards, FedWire, these are decades-old technologies. These are not anything new and fancy and fast. The difference is that, a small group of people with very large amount of money were not confident in a bank. I think there's no real line you can draw between the two.
And open banking is not online banking. I think when people say the speed is what caused the last crisis, I don't think they're referring to Section 1033 of the Dodd-Frank Act. I think they're talking about,
2155.
or likewise. I think we're talking about how money moves faster today. Open banking or not, online banking and the ability to press a button and move a lot of money drives runs. We should be thinking about it. It's a good question. But I have a hard time believing that in the wake of a bank crisis, someone's going to say, you know what? I'm not going to move my money because I really wish I had my transaction information with me, so I'm just going to leave it in that bank. I think I err with John that the opposite world is scarier than the world of some weird, too much freedom that open banking might provide.
Well,
It's also, we're talking about data access, not money access, right? So, 1033 is about access to my own data. Now, in theory, somehow access to my data could encourage somebody to offer me a better APY on a bank account, right? Like that's one possible use case. But at the end of the day, as Chopra said, like, do we want to have people denied the right to get a better yield on their savings account? Like that's what we want people to be doing, is finding the best solution for themselves. So I think, so many of the use cases are so clearly in the customer's benefit to being able to seamlessly share their data, and that's one of the fallacies. Some people are like, oh, it's your data. And then some of the letters in opposition to open banking are like, yeah, but you can't do this and that with it. It's like, wait a second, right? Like, if it's my data, that means that I need to be able to act with it, right? And so that's, I think, a distinction that people, when you see the pushback, you need to kind of push through that.
I think there's sort of, we still cling to a vision of, Jimmy Stewart at the savings and loan saying, just keep your money here, we'll make it through the night. We're far beyond that anyway, so this is sort of it seems a little bit of a strange concern. I want to raise another question, which may be a little trickier to deal with, which is the question of liability. There's really still sort of a set of open questions about who bears liability if the data that a consumer agrees to have moved from their existing financial institution to another financial institution is misused in some way, or used in a way that's outside the scope of the consent that the consumer has given. Who bears responsibility? The recipient of the data, the transfer of the data, or data aggregators or other parties. So I want to address that a little bit. And again, I'm going to throw this open to the panel for thoughts.
Yeah, I mean, on this, it is something that is, under consideration, or it has been bantered out how best to deal with it. But there are clear rules from the federal level, from the state level, on kind of what happens when money transfers from one entity to the next. What happens when you have the partnership with the bank and where it is going from one end to the other. If there is a break, you have to look at to where the break is, whether it be a data breach, whether it be some entity that breaks. And so there is already embedded into the system in which we have, which we will carry over into an open banking system, the ability to say, if, where, and when the breach does occur, or where and if there's something that is off, that you will be able to go and remedy that at that point. There's some larger questions I know that the CFPB is going to be addressing in the rulemaking that we will all kind of be put into it. But right now, there is mechanisms already and regulations oversight as to on both the federal, state level on that piece of it.
Other comments?
I mean, I would just echo what Penny said, like, data breaches are not a new thing. Right, like I can think of lots of data breaches that have happened recently, and I don't think there's ever been like a lack of clarity that, like, when a large hotel chain has their credit card data breached, who's liable for that? When a large credit bureau has their data breached, who's liable? There's never a question about like.
Well, I think just to play devil's advocate for a second, I think the question, at least some version of it, is not so much about data breaches per se, where data gets out sort of into the wild and is misused, but more that a fraudulent entity, a fraudster of some kind, or just a entity that doesn't have control of its, or competent control of its operations, requests the data, for a consumer, the consumer agrees, the data is transferred to that entity, and then it's misused. So it's a version of a breach, but
Jeremy, are you arguing that it's not clear if a fraudster is responsible for fraud.
Well, this is sort of I think the answer really is the criminal law, the existing data privacy protections, others, cover this, but the specter of it is something that feels new to people, and I think it's scary. Because I think there's this vision that a new type of fraudster is going to emerge as opposed to the old type.
I think the supervision, I was going to say supervision solves for that, right? So under open banking where Plaid has supervision, right, then there is a guardian who's watching to make sure that, fly-by-night Inc. who steals your money doesn't get like the other side of the plug-in to like access the person's credentials and then steal their money, right? The idea is that that's why you have supervision, so that somebody knows that, it isn't just, whoever signs up gets access, that there's some controls and some vetting and some standards that, can either be published standards or just simply, standards that are communicated through supervision, right?
I also would say it's an opportunity, right? Supervision is one of the important requirements here, but from our perspective at Plaid, at least, that's not enough. So we've spent an immense amount of time and money and resources on building things like, a portal where the consumer can see every data connection, which app has access to which data, under which rules, from which bank account. And if they change their mind about that, they can go to that portal and turn off that app's access. They can, in one click, ask Plaid to delete their data. I'm not sure whether any of that is going to be in the regulation. I hope it is, because I think we should level up the entire market to that level. But whether or not it's required by regulation, it's something that we're going to do. And it's not something that consumers have had in financial services in the past, right? Gramm-Leach-Bliley does not require that level of consumer control. What Gramm-Leach-Bliley requires is the letter everyone here gets once a year saying, hey, we're doing a bunch of stuff. And I think there's an opportunity for all of us to create better privacy expectations. I hope that's backed by regulation, but whether or not it is, that's the consumer future we are building to, and it's the consumer future that everyone should be building to.
I think the question is really whether everyone will be at that level, and meeting that high level, that standard is part of what government is for, right? Yeah. Requiring leveling the field and protecting consumers. I think this is the Fintech Nexus conference, not the banking conference, but the banks, to the extent the banks have commented on this issue, I think they of course want the ability to say no when a consumer or somebody requests the data, but they're also concerned that, if they're not doing the due diligence on the recipient of the data, who is? And that, to your point, well, Plaid is, as long as it's Plaid, we're fine, but if it's someone else, that's a question. So that's something that the regulations hopefully will
Well,
address.
this is where you raise the bar for everyone,
Yeah.
right? And that's a value of regulation, is setting a standard that everyone needs to meet or get out of the business.
So I should probably, as a bank, comment on Jeremy's point.
Yeah, get off the stage, Owen.
I was trying to stay out of the whole liability thing because it's boring, and I was a lawyer, and I try not to be one, but freaking Jeremy's a lawyer, so we got to do it. I think that the banks have had some legitimate concerns about certain tactics that take data, store it, and then they might be held liable. On the other hand, APIs should help solve some of this because the data should be a lot tighter, the banks control the API, right? If you're getting the bank data. Open banking should impose responsibilities on banks for that control. They shouldn't be able to control data down to what the data they want to share. It really should be the customer's data. But the movement to APIs solves a lot of this, and I think some of the litigation concerns about screen scraping and others probably had some legitimacy, but we're moving a little bit away from that now. So I think some of those arguments may be not as apt today as they were in earlier iterations of open banking.
Armin, can I actually build on that API thing? Because you said earlier, as a bank, once you became a bank, you didn't stop liking open banking.
Correct.
And we've actually found that to be true universally. There's a lot of community banks and credit unions that say, hey, this is essential. Like, if our customers can't be customers and have the apps they want, they're not going to be our customers. So we want it, but we do want it on API. And we just announced today, through some initiatives we've taken, largely a core exchange API platform that's aligned with the FDX API specification. We now have 2,100 banks and credit unions enabled to have API access. They're community banks and credit unions. We've done it through partnering with platforms and getting them on. It's been at zero cost to those banks and credit unions. And that's in 1 year. That's a dramatic transition in the industry from where we were 1, 2, 3 years ago. It also puts those small institutions on a level playing field with the biggest Wall Street banks in terms of technology and also what their customers have access to. So I think that the smart banks are seeing this, just like Armin is, as this is an essential future for us. We want it to work well, we want it to work safely, and our job is to make sure that gets built.
Well, also remember that they're on the other side of that coin when they're like being powered by Upstart, right? So like if they're benefiting from the ability to access a customer's data in order to power their lending solution, it's kind of hard to be like, oh yeah, but I don't want my customers to be able to share their data in order to get the best possible product, right? So that's the other side, is that many of them have at least one fintech partner, probably more, and almost all of those partnerships, there's some need to access data from people who aren't within their own institution.
Yeah, it's a barn door issue, and they're clearly in the barn.
And just
playing.
because I have a thing against acronyms, FDX, not FTX, so Financial Data
Yes.
Exchange. Financial Data Exchange. The last crypto, there was a crypto panel last time, so
we have to change that acronym, I think. John, you touched on this a little bit, but one of the other concerns that's been raised is sort of the idea that only the large banks can really take advantage of this because it requires investment in infrastructure, APIs, et cetera, and that it will end up further, reinforcing the inequities between small and large banks and in turn their consumers. So I'm curious about your views on that and others in the panel.
I probably should have saved my 2,100 banks mic drop for that question. But I could not disagree with that more as a perspective. What does a community bank and credit union have as a competitive differentiation? They have a really great, close, personal relationship, right? It's personal banking in the way we think about with, George Bailey, and knowing the people coming into his, I believe that was a thrift, but I'm not sure.
Fair enough. Good correction.
So that's a real competitive advantage. What's the disadvantage? Scale. Right? You don't have branches everywhere. You don't have the tech stack or the ability to develop all of these products and services. Well, if you can have that personal relationship and then be an open banking hub that your customers connecting all these other apps and services, and they view that as part of their banking relationship with you. And in the same way that credit cards have for years fought for top of wallet, right? I want my card to be the top one that the consumer picks out. In an open banking world, I think banks are going to be competing for, I want to be the top account. I want to be the home account that my customer wants all of their apps connected to. That's a competitive advantage for me. And that combined with the personal relationship, like, yeah, sure, maybe I go up against Chase. Maybe I go up against Bank of America. Maybe I go up against Wells Fargo for delivering a customer experience that is at the level of those institutions, but without having to have a $1 trillion balance sheet.
I would just say we also represent, similar to the work that Plaid is doing, we also in our membership is MX, another data aggregator. They are also doing the same thing in opening up the ability to connect to their APIs free of charge for the smaller institutions and others to be able to bring them online sooner, faster, quicker, cheaper. Again, to opening up, because the consumers are asking for this, as John was alluding to. 75% say they choose, they're choosing right now their bank, where they're banking based on their ability to connect to an app. And so it's imperative for the survival of these smaller institutions to be able to have this ongoing tech stack, or at least the connectivity. So you have aggregators such as Plaid, such as MX, and others that are making this more available, so those smaller institutions can survive and be fruitful.
And then that's how they're competing in everything, right? So in lending, in consumer lending, the biggest credit card issuers, like the role of the small banks now and the marketplace lenders is to help people refinance out of credit card debt, right? That's a part of the consumer lending market that they're not going to be enabled unless they have a tech partner. So the only way that community banks, regional banks are going to compete with the biggest banks in any of these markets, whether it be deposit gathering or offering a service is going to be sophisticated API-based, technology partnerships that enable them to harness what they have, which is deposits, low cost of funding, personal relationships, a growing presence, and then show that they can give the customer and potentially new customers everything that the big ones can.
It's interesting because I think there's a sense that because smaller banks don't invest as much in IT or technology for the consumer-facing technology, that they wouldn't invest in this. But this is obviously a different. It serves a purpose for the consumer that a lot of, interfaces that small banks have with their customers aren't really worth investing in.
I think the size discussion is important, but business model and your ambitions matters too. I mean, I think there are large banks that have resisted open banking because they feel like they don't need to give to get because they have so much already. So they may have the ability but not the desire. And there are smaller banks who don't have the ability but probably not the desire either. I mean, if you have a niche product, if you have a niche geography, if you're happy doing your $100 million balance sheet thing, I'm not sure it makes sense to invest in this, and it seems like your specialty and your geography and the thing you do relation banking is going to be the thing you do. So I don't think everybody needs to be in the tent, but I do think a lot of people can be, and the small banks that do have this ambition can take advantage of partnerships with the American Fintech Council, with the Financial Technology Association, and partners that haven't been created yet that'll make API access easier as we are moving to this kind of world of APIs being the way open banking works.
So I want to shift gears a little bit in our last remaining time to talk a little bit about the current regulatory efforts. And as we mentioned, I think the CFPB has put out an outline of issues in advance of a rulemaking on to implement Section 1033 of Dodd-Frank, which basically is the open banking provision of that statute. And that outline kind of goes through all of the issues, the questions that the Bureau has raised for comment, advanced comment on a rulemaking, and it covers a lot of ground. But there are things that it doesn't cover. We talked about some of the things. It doesn't cover liability, really. It doesn't cover some of these questions of misuse of data. There are other things it doesn't cover. But I'm interested in what the panelists, their view of the outline and the approach that CFPB is taking so far.
So I have given our perspective in a 112-page comment letter. I
Summarize for us.
assume you don't want all of that. I would summarize by saying it's a really strong initial proposal. The scope is good. The addressing things like how authorization and how consumer consent work, how disclosures work, all of that seems to be very well thought through and headed in the right direction. I think there's a little bit of industry wanting more in terms of scope, because right now it just covers Reg E accounts and Reg Z accounts. Those are payment accounts and credit card accounts, for those of you who don't read the Federal Register before bed each night. And that means that your mortgage might not be covered or your auto loan might not be covered. And I think there's a hope that it'll go there. What I've heard Director Chopra say is they're starting small, but it's just a starting point, and they intend to expand on later. Hopefully that expansion is quickly. The more control the consumer has over more of their financial data, the more opportunity they have. But overall, it's a very strong proposal.
After listening to Director Chopra today, I feel like some of the ambiguity in the proposal that some in the industry might have been worried about, I feel a little bit better about, frankly. One of the things in the proposal that kind of concerned me was, should we crack down on anonymized data? And I kind of felt like, are we, one of the questions was about data that's anonymous. And I was kind of like, God, I feel like anonymous data should be pretty harmless. I mean, the GLBA doesn't cover that. California doesn't cover that. Europe doesn't cover that. So seeing some of the question, but now hearing the way he spoke today and with some of the benefits of banking, I feel like there's going to be some reasonable interpretation from here that there's certain data that has to flow, and anonymized data must flow because it allows us to build models better. If we have to delete data that is anonymous, How do you have a good data set? I have researchers contact all of us, I'm sure, for data at the OCC or at the Fed. If you can't give anonymous data, how do you do research and create financial healthy products? So that's some of the areas where I had worries, like anonymized data, too much control over secondary data, too many restrictions on secondary data transferring, which of course is you come to Lending Club for a loan, can Lending Club use that data that you provided for a loan to maybe offer you a better savings rate or something? Can we do something else with that data besides the thing you came to us for? Even there, I heard Director Choberte say, and I don't know if someone was in the room, but I heard him say, we're concerned about secondary data for non-financial services products. And that to me was encouraging as well, because we want as much opportunity for consumers to get better products as possible. So we can't be over-limiting this data, but we have to protect consumer data, of course. Obviously, we do have a regime for that. We don't want 1033 to become a new privacy regulation.
Penny?
No, I was just going to say, after 12, 13 years of having this out there, to be able to get this far, even through where we are, is a real encouragement. And to hear the director today really make an emphasis on it and a priority to have this completed in a way, I think we all were pleased with the thoroughness of the initial outline, the secondary report coming out of the small business panel, and now looking forward to the proposed rule. And I would say also that, we're here obviously at Fintech Nexus and we're representing fintechs, but a lot of the banking, trades and others are also very complimentary of it and are working together. There's a lot more we agree on in that initial outline than we don't. There are some sticky details, obviously, that we all must work through, but encouraged that they also see where the future is heading and the ability for consumers to permission their data, and wanting to figure out what it is, how they play in this as well. So that was encouraging to see.
It's
through the
how to
comment
do
letters.
it, not whether to do it. Yeah.
And I would just say it's really.
You get the last word now.
No, it's just really important that it's not Swiss cheese open banking, right? Selective open banking, because, we're right now building sub 36% small dollar product. It's really hard to do. There's a reason why, small dollar products that are short term end up being very high APR, but it's better to have a very affordable payment for the customer. It's better to have a lower APR, all things being equal, like lower cost. And that's really enabled if, that could be stunted without access with Plaid to really get the opportunity for Upstart to, help serve somebody with a product that they might really need. So it should move, it's a great opening proposal. It should move towards as comprehensive as possible a proposal to make sure that every use case that's responsible is covered.
Well, we're out of time. I'm sorry we didn't get to any questions, but this was a really great panel. I thank you all for joining us, and thank you all for joining us at this last session.
Oh.
Sorry, I'm sorry.
Surprise panel.
Stay in your seats.